it is called a new tax regime. Every year in a budget, finance minister, whenever he presents his budgets, he gives various production, various deduction, various incentives for many of the assessees, so that what they can do is they can plan their organization, plan their activities in such a manner that they will definitely able to do something financial year. Now, why it is called a new tax regime? If you really see, last 2 years, one is at the corporate level and is at individual level. I will first talk about individual level. There, what they have done is they have tried their level best to give an opportunity to the assessee that whether should they accept this particular thing or not. That means they have given a new regime, new activity which were not there earlier. Earlier, you don't have choice, but you have to follow whatever income tax act or finance ministry says you have to do like this. Now you have a choice whether you should do this or you should not do this. Okay. Accordingly, this entire new concept of new tax regime was best, and therefore it was introduced by Nirmala Sitharaman in the budget 2020 with more tax slabs at a lower tax rate. They have increased the tax slab into 1, 5%, 10%, 15%, 20%, 25%, and 30%. It means they have done a 6 tax slab vis-a-vis what was there in a old tax regime, which is continued. It has not been discontinued. It is only 3, 5%, 20%, 30%. Now, tax slab which has been given here is for an individual, and I'm talking about for individual, but also applicable to HUF also. HUF is Hindu undivided family. That also, they have done is up to 2.5%, both are all individual HUFs are happy, no tax. The next slab, also they did not make any changes between 2.5 lakhs to 5 lakhs, 5% and 5%. Now, what they have done, a income which is exceeding 5 lakhs. Okay, they have tried to divide between new regime 5 to 7.5 lakhs, 7.5 lakhs to 10 lakhs, 5 to 7.5 lakhs at 10%, 7.5 lakhs to 10 lakhs is 15%, and 10 to 12.5 lakhs is 20%, and 12.5 lakhs to 15 lakhs 25%, which was 20% up to 10 lakhs in the old regime. And if you really see, above 10 lakhs, the income was taxable at 30%. Now, this is basically giving a lot of complications, and though they say it's a very simplified kind of thing, they are trying to see that you will get a lower tax obviously. But what are the reasons? What are the conditions? So let's see. If you really see in my slide, I have said in the old tax regime, tax rate varied on the basis of age group. In the old regime or old tax rate, they have given a lot of recognition to the senior citizen, which is above 60, and super senior citizen or very senior citizen, which is above 80. Now, in new tax regime, they have not made any distinction whatsoever between senior citizen, very senior citizen, and a normal citizen. What they are saying, all are on equal footing. What are the conditions to offer new tax regime? As I earlier told you, that new tax regime basically is applicable to all the individuals and HUF, provided you have forgo the exemptions and deduction under various chapters and sections of the Income Tax Act, which are being given below. They will not be entitled for getting any deduction in respect of leave travel concession as contained in the clause 10 of section 5. I have given the section 10.5 because suppose in case somebody wants to refer the 10.5, they can refer. Similarly, house rent allowance as contained in section 1030A. If you really see, the company always pays a house rent allowance to the various employees. Instead of buying the flat, they go on taking on hire, or they are taking on the rent, and they also pay a good amount of rent to the landlord. Now, some of the allowances as contained in the clause 10 of section 14 also talks about this particular allowances. Earlier there used to be a very good amount of allowances to be taken as an exempt for the purpose of the employee, and therefore ultimately whatever amount of salary they used to get, a chunk of salary they used to get by a tax-free allowance. Now, key pointers: domestic company opting for 115BAA will not be able to take a credit for taxes paid under MAT during the tax holiday period. The companies would not be able to reduce their tax liabilities under the section 115BAA by claiming MAT credits. The CBDT may issue any clarification for MAT. Domestic company opting for 115BAA shall not be allowed to claim set-off of any brought forward depreciation. First of all, they are not allowed to claim additional depreciation. I will just give you the example of this. A domestic company who incurs a capital expenditure during the year, they get a normal depreciation of, say, I'm just giving the hypothetical example of, say, 30%, that is 15% plus 15% is normal shift and 15% extra shift, okay, or 30%. But in addition to that, they also entitled under section 32(1)(2)(a) additional depreciation of 15% for computing the deduction benefits for getting more depreciation, so that, because of this technological improvement, you can write off your asset faster. But once you opt for the 115BAA, you will not be, under the new tax regime, you will not be entitled for that deduction as additional depreciation. There is no time limit for the domestic company to choose. This is most important kind of thing that one should really think. There is no timeline for the domestic company to choose a lower tax rate under 115 BAA. So such companies can avail the benefit of section 115 BAA after claiming the brought forward losses on account of additional depreciation and also using the MAT credit against the regular tax payable.